Hello, everybody. Welcome back to a new post which I will be discussing with you the union budget and part B of the union budget I will be doing in this post of today. So, as we had discussed in the previous post, the union budget of 2022 and 23 has part A and part B, and yesterday we had seen the highlights of part A, which included the four priority areas of Gati Shakti, inclusive development, productivity enhancement and investment, sunrise opportunities, energy transition, climate action, and finally financing of investments. So in these two posts we will be just seeing the highlights of the budget, and the next post onwards I will be discussing with you each and every part of the budget, that is the four priority areas, and also the part B along with the significance of the steps taken, how it would impact the particular area, and what are the important points that will be important for you to remember, especially from the mains perspective and also from the preliminary. So let's get started with this part B part of the budget. And yesterday we had seen that the budget of this year seeks to complement the macroeconomic level growth with a focus on microeconomic level all inclusive welfare. So this very statement is very important, especially if you write an answer in the mains with respect to your budget, whether it be any priority area or with respect to the taxation sector part also. So this is the very basic statement that the budget has given in the parliament, saying that it seeks to complement macroeconomic level growth with focus on microeconomic level all inclusive welfare, and we have seen the steps taken in part A. Now coming to part B, that is the taxation part of the budget, which includes both your direct taxes and the indirect taxes. The basic objective now of this part B has been declared as a policy, bringing about a policy of stable and predictable taxation regime, which intends to bring more reforms that will take ahead the vision to establish a trustworthy tax regime. So this is the basic objective of the taxation part of the budget. Now the proposals relating to taxes and duties will further simplify the taxation system, promoting a voluntary compliance by the taxpayers and also reducing litigation. So let me tell you that a policy of stable and predictable tax regime is the most important factor, which shows a very good taxation policy of the government, which will spearhead investments and also planning of various other business activities and projects. So now let us look at the direct taxes side of the budget, which is also important from the steps taken by the government, especially as we are facing the third wave of the pandemic. So the direct taxes and the indirect taxes. Now looking at the direct taxes first, the budget says that it is taking forward the vision of a policy of stable and predictable tax regime to establish a trustworthy tax regime and to further simplify the tax system and reduce litigation. So it introduced a new updated return, that is a provision to file an updated return on payment of additional tax. And now this will enable the SSC to declare the income that was missed out earlier. And now this can be filed within 2 years from the end of the relevant assessment year. So various other steps have been taken for the cooperative societies. The alternate minimum tax paid by the cooperatives have been brought down from 18.5% to 15%. Now this is a very important step because the government has been taking steps to bringing down this tax and also to bring it on a level playing field between the cooperative societies and companies. Now surcharge on cooperative societies has been reduced from 12% to 17% for those having a total income of more than 1 year and up to 10 crores. Moving forward to the tax relief to the persons with disability, the budget says that the payment of annuity and lump sum amount from insurance scheme to be allowed to differently able dependent during the lifetime of the parents or the guardians attaining age of 60 years. Changes have been brought also to bring parity in the national pension scheme contribution to on par with the central government employees. For this, the tax deduction limit has increased from 10% to 14% on the employer's contribution to the NPS account of the state government employees. So, with this step, this will bring them on par with the central government employees, and this would help in enhancing the social security benefits. Moving up to the startups now, startups have been a focus of this government from the beginning, and so the period of incorporation has been extended by 1 year up to March 2023 for the eligible startups to avail tax benefits. And previously, the period of incorporation was only valid up to March 2022 this year. So now, newly incorporated manufacturing entities will also be incentivized under the concessional taxation regime. A scheme for taxation for virtual digital assets has been brought in. Now, a specific tax regime for virtual digital assets is an important point of this budget, and it has been introduced this year. Now, any income from the transfer of any virtual digital asset will be taxed at 30%, and no deduction in respect of any expenditure or allowance will be allowed while computing such income except the cost of acquisition. So, apart from that, to capture the transaction details of this virtual digital assets, TDS will be provided on payment made in relation to transfer of virtual digital asset at the rate of 1% of such a consideration above a monetary threshold. And now the gift of a virtual digital asset also will be taxed in the hands of the recipient. So this is about the virtual digital assets tax that has been introduced this time. The budget also proposes better litigation management to avoid repetitive appeals. Now, in cases where the question of law is identical to one pending in the High Court or the Supreme Court, the filing of an appeal by the department shall be deferred till such a question of law is decided by the court, and this will lead to avoiding repetitive appeals and also benefit the taxpayers. The next important step is rationalization of surcharge to give boost to the startup community, especially the associations of persons. So the surcharge on associations of persons, which is a consortium formed to execute a contract, is formed at 15%. Now, this has been done to reduce the disparity between the individual companies that are incorporated and the associations of persons AOPs. Surcharge on long-term capital gains arising on transfer of any type of asset has been capped at 15%. Further, rationalizing of TDS provisions has been taken. Now, benefits passed on to agents, such as business promotion strategy taxable in the hands of agents, and the tax deduction provided to person giving benefits if the aggregate value of such benefits exceeds 20,000 during the financial year. As I said previously, we are just looking at the highlights, and we will be taking separately what is the major provisions and how the impact of the direct taxes will be affecting us and also the other companies, along with the indirect taxes steps and other various provisions of Part A. So moving on now to the indirect taxes section. GST has been lauded now. We have seen that GST has been an important component, especially during the pandemic period, and we have seen how the market analysis also had pinned their hopes on the GST to predict whether the economy is growing or not. So the budget this time had praised the GST revenues, which they said they were buoyant despite the pandemic, and the taxpayers deserve a applause for this. The government has been taking steps to increase the coverage of the GST and also to do away with those people who are foregoing the GST or not paying the GST amount on time. Litigations related to GST are also being synchronized. So, the other most important thing is special economic zones. We have seen yesterday in part A that there is a new law that is going to be replacing the special economic zones, and here in the indirect tax proposals, the Customs Administration of SEZ is now to be fully IT driven and function on the Custom National Portal that will be implemented from September this year 2022. Further, customs reforms and duty rate changes. So, faceless customs have been fully established, and during the COVID 19 period, customs formations have done exceptional frontline work against all the odds, displaying agility and purpose, says the budget document. Project imports and capital goods. Under the gradual phasing out of concessional rates in the capital goods and project imports, applying a moderate tariff of 7.5%, conducive to the growth of domestic sector and especially keeping in mind Make in India. Now, certain exemptions for advanced machineries that are not manufactured within the country shall continue, and a few exemptions introduced on inputs like specialized castings, ball screw, linear motion guide to encourage domestic manufacturing of such capital goods. Now, a review of the customs exemptions and tariff simplification has been carried out, and so more than 350 exemption entries proposed to be gradually phased out, like exemption on certain agriculture produce, chemicals, fabrics, medicinal device, drugs, and medicines for which sufficient domestic capacity already exists. And in line with the objective of Make in India and Atmanirbhar Bharat, simplifying of the customs rate and the tariff structure has been proposed. In the budget, removal of exemption on items which are and can be manufactured in India and providing concessional duties on raw materials that go into manufacturing of intermediate goods has been done. Looking at the sector specific proposals, now the budget highlights the sector specific proposals of electronics, gems and jewelry, chemicals, MSME, exports, and finally the step taking to blend of fuel. So, looking at the electronic sector now, to facilitate the domestic manufacturing of wearable devices and other devices such as hearable devices, electronic smart meters, now custom duties rate is to be calibrated to provide a graded rate structure to enable the domestic manufacturing of high growth electronic items. Duty concessions to parts of transformer of mobile phone chargers and camera lens of mobile camera module and certain other items has been taken up, especially in the electronics sector. Moving to gems and jewelry, a simplified regulatory framework to be implemented by this year to facilitate export of jewelry through e-commerce. And now the customs duty of at least 400 per kg to be paid on imitation jewelry. This step has been taken to disincentivize the import of such imitation jewelry in India. And customs duty on cut and polished diamonds is being reduced to 5%. At the chemical sector, now to help enhance domestic value addition, custom duties on certain critical chemicals like methanol, acetic acid, heavy feedstock for petroleum refining is being reduced, and the duty is being raised on sodium cyanide for which adequate domestic capacity already exists. This will help in enhancing the domestic value addition. For exports, to incentivize the exports, exemptions is being provided on items such as embellishment, trimming, fasteners, buttons, etc. Duty is being reduced on certain inputs, equipment for shrimp aquaculture to promote its export from India especially. And now, finally, the tariff measure to encourage blending of fuel, which has been an important component of the government, unblended fuel to attract an additional excise duty of 2 litre from the 1st of October to encourage blending of fuel. Blending of fuel has been a priority of this government. And finally, now the MSME sectors. Now, customs duties has been raised on certain items such as umbrellas, and exemption to parts of umbrellas has been withdrawn. Exemption is being rationalized on implements and tools, especially for the agriculture sector which are manufactured in India. Custom duty exemption is given to the steel scrap last year is now being extended for another year to provide relief to the MSMEs, especially due to the shortage of certain metals. Certain anti-dumping duties and CVD on stainless steel and coated steel products especially is being revoked to tackle the prevailing high prices of metals in larger public interest and especially the interest of the MSMEs. So, this brings me to the end of part B of the taxation proposals in the budget. From the next post onwards, we will be discussing the each area of the budget along with the repercussions and how important the steps are and what are actually the expectations with regard to the budget. Until then, thank you.